Hello trading friends and welcome back to Forex Focus, brought to you by tastyfx. Well, Trump is moving markets once again. I'm sure you've seen the fallout from the changing Trump odds. We'll cover that in just a second. He's become by far and away the leader by a number of different metrics going into our U.S. presidential election later here this year. And he's also become a lot more vocal on the heels of the Republican National Convention and so many other pieces the last couple of weeks here as we enter this election cycle. And you've seen some back and forth in stocks, some sector rotation for sure out of some of the tech stocks that have been booming the last couple of years and into some of the small caps, some of the manufacturing stocks. We'll dip into that a little bit, but I really want to talk about the US dollar here today because we've seen some heavy dollar selling the last couple of weeks in the same time that we've seen these political shifts, and I want to dissect why this might be happening. Of course, there isn't 100% correlation between Trump's recent rise in a lot of the polls and the US dollar moving lower, but you have to definitely follow this piece because Trump has been very vocal about wanting the US dollar to move significantly lower, and we'll cover all of that in just a second, but a little bit of background on the shifts we've been seeing across stocks, forex, interest rates, so many different markets on the heels of Trump rising to now by, I mean, most of these prediction markets have him between 65 and 70, maybe a little bit above 70% chance of winning this election. And this was much closer than to 50-50 a couple of weeks ago, as Biden has absolutely dipped in the public eye and in these markets as well, as Trump has taken over a lot of that market share. Of course, these prediction markets are by no means telling of what is going to happen come November. But when you look at something like Polymarket here and the fact that there's a few $100 million being bet in this market, relatively efficient. Is it as efficient as the equity market with trillions of dollars a day, or the forex market with trillions of dollars, or the treasury market with trillions of dollars being traded every day? No. But I just didn't want to bring up some polls here. I thought this piece was a little bit more interesting, especially for those traders out there. And of course, predicted another prediction market that you can reference that I think has them around 66 or 67%. But either way, Trump is becoming the favorite here. These things will shift back and forth, and just for your reference, obviously 2016 was a big surprise. A lot of people thought, and a lot of these markets had Hillary positioned as the favorite going into that election night. And also, I remember sitting there watching this stuff and watching all markets last election cycle when we had that head fake throughout the night of Trump, he's going to win this thing. And these markets I saw went from him being a 20-30% favorite to a 70-80% favorite. This is all to say relatively thin markets, a good finger on your pulse for what's going on in July, August, September, what have you, but definitely no guarantee. Don't necessarily round that 70% up to 100% and just say, oh, well, Trump has to win now. These things will change. But what we're seeing in the short term with Trump's favored status rising is a U.S. dollar that has started to move lower. And a lot of people wondering, was that the peak in the U.S. dollar for the next couple of years here? First of all, it would be a hell of a peak, right? Dollar yen getting up above 160 for the first time since the 1980s. That's a pretty strong level there, and does build a good case for Trump here, not only in terms of Japanese yen, but a host of other currencies that definitely have had an effect on the U.S. economy that we'll cover in a second. And he, last election cycle and now in this election cycle as well, has been very vocal about how he wants of course, so many parts of the U.S. economy strong. He's very vocal about the U.S. strength in many different ways, but wants this dollar to be weaker. He said it back in 2019, and now he's here saying it again in 2024 as we head into this election. And okay, you've got the big price extreme. You've got the euro dollar market has been pretty much under 110 for the last couple of years here, and 110 years prior was pretty much the low in euro dollar. And of course, we got parity in that market in the last couple of years. For the first time in decades, the pound dollar market is just now starting to get back to 125, 130, whereas that market's been up at 150 or even $2 in the last handful of years prior to the most recent 4 years where we've seen really extensive U.S. dollar strength. How is this negatively affecting the U.S. economy? To Trump's point, let's take a look at trade balance. That's going to be the biggest piece here. And not only in the last 4 years has it been way more negative than it was the prior 4 years when Trump was president, but also it's dipping again recently. And the balance of trade here, or the trade deficit, is of course going to be your exports minus your imports. And so what this number is telling you is that the U.S. is importing a lot more than they're exporting. And while it's not necessarily the end-all, be-all number of the U.S. economy, obviously the U.S. stock market is still printing around all-time highs, and there's a number of other ways that you could pitch the U.S. economy as being very strong. This is very important for a handful of companies and everyday people in a lot of different ways, and Trump's been very vocal about that. He's got a lot of populist rhetoric, and this is a big piece of it. And yeah, the most recent print, the worst since 2022, as imports are continuing to grow here in the U.S., but the real big piece is that exports are really not growing at all. And let's actually take a look deeper on this number, because remember, it is a formula. Obviously, it's negative here, and so you're going to probably take into account a couple of different numbers. And so looking at imports for the last 12 months, you see that this number has climbed around 10% in the last year, and has been pretty consistent in its climb. The most recent reading was a little bit lower than those. I think that was maybe all-time highs for imports, if not close to it, back in April. But pretty steady pace, up around 10% the last year. Exports, you saw a little bit of growth, but a lot of flatlining the last several months, hence the trade deficit dipping even further negative. And the export value here is a number that's only grown around a couple of percentage points relative to import growth of around 10%. And so what this means is that manufacturers here in the U.S. have been failing to create demand abroad for their products. And Trump often quotes companies like Caterpillar and Boeing, but also your Procter & Gamble's, your Coca-Cola's and Pepsi's, U.S.-based companies that are producing obviously great products, but not able to ship them off to Europe with a sub 110 euro dollar market, or off to Japan with a 150, 160 plus dollar yen market, and then of course even more widespread to a number of the minor forex pairs or developing economies that have really gotten hammered relative to US dollar in the last couple of years. And so it can really affect certain parts of this U.S. economy. Like I say, the S&P 500 and the NASDAQ, that is overwhelmingly a handful of tech companies. Yeah, it affects those tech companies, and I believe that Apple and some of those large tech companies have quoted this strong dollar as being a headwind for their business. But really, go take a look at some of these stocks here and some of the other ones referenced along with this story. look at their performance relative to other ones. And then you also think about, like I say, the everyday people that are affected by this. A lot of jobs created here in the U.S. by companies like this, and them not being to export these goods, of course, still drumming up a lot of demand here domestically, but that really affects bottom lines, really affects potential for employment. And we've seen U.S. employment take a little bit of a dip in the last couple of months by a number of metrics, as it seems like unemployment's on the rise a little bit, and that employment change, the non-farm number, does seem to have peaked a handful of months ago. Now, how can we devalue our currency? There's not as many straightforward ways as you might imagine. Of course, China catches a lot of flack for the fact that they pretty openly manipulate their currency. They set ranges for their currency relative to the U.S. dollar. We don't do that. Obviously, this market trades very freely, but you can pull on a couple of levers, one of which being the interest rate. And of course, so much talk about U.S. interest rates and when they're going to come down. They haven't yet, and that's a big piece of this strong U.S. dollar, as people have much greater demand for U.S. dollars to invest at 5.5%. Than their Japanese yen or these foreign currencies at lower interest rates or greater instability. And so lower interest rates and more dollar printing, putting more dollars into circulation from the Fed, could depreciate this U.S. dollar. Theoretically, of course, all the macroeconomic heads out there know these things. Markets are expecting some rate cuts here in 2024 and then more in 25. But Republicans and Trump, and as well as Democrats, but for different reasons, have been imploring the Fed to start to cut interest rates lower for a multitude of reasons, this being one of them. But keep in mind that the president doesn't control the central bank. Now, the Treasury is a little bit more political, and he may have some more pull there to create more incentives for the U.S. dollar selling and a pickup for exports, and maybe even a decline in imports with all the tariff talk that's been on. But the concluding question becomes, would a Trump win be bearish for this U.S. dollar? You've seen some of the price action around this recently. Like I alluded to earlier, I wouldn't necessarily hang your hat on it. One, it's July and there's going to be a lot of back and forth. But two, the president, while being maybe the most powerful person on the planet, only controls so much, right? The central bank will operate with the president's influence, but not as a function directly of what they say. The Treasury, maybe a little bit more influence over that piece. But you're talking about a U.S. dollar market that, one, has dozens of relationships across not only yen, euro, pound, but Australian dollar, Canadian dollar, a host of minor pairs, a host of exotic pairs, and all with their own dynamics. But two, as we saw, of course, you can create this story of, look at the last 4 years of price action. It's been a lot of upside in U.S. dollar, and then look at 2016 to 2020, and it was a lot of sideways action on the U.S. dollar. But no president, be it Republican or Democrat, is powerful enough to have as big of an effect as the pandemic did, the inflation that followed the pandemic, and everything else we've seen, high interest rates and the U.S. dollar strength the last couple of years. Biden, definitely a part of that, maybe did push this U.S. dollar higher than someone like Trump would have, with the way his stances played out the last couple of years. But yeah, only so much control. That being said, a lot of selling kicking in the same time that Trump is rising in a lot of these prediction markets and polls. We'll continue to monitor the US dollar price action, obviously, but we'll also give some updates on the political landscape, who's saying what, and what that could mean for the US dollar price action in the future. Thanks for watching, everybody.